Dipan Mehta also joins us on the show. And Dipan, why not talk about that Tata Group yet again, but this time talk about Tata Tech, the IPO that everybody is awaiting. Your sense as to how the valuations stack up versus the rest of the peer. I know we don't have the official number in terms of the range of the IPO price, but as we discussed, it won't be much away from that October price discovery wherein the equity valuation was close to 16,300 crores.
Yeah, good morning and thank you for having me on your show. I wish I had also worn my India t-shirt. Really nice gesture on your part, both you and Nikunj. So I think Tata Technology is going to be a fabulous IPO, and certainly it's going to be oversubscribed many fold, and therefore allocations are expected to be minimal. I'm not aware of what the valuation will be, but I suspect it will be around about the peer group valuation of mid-cap companies, 30-40 times, maybe trading 12 months. And the most interesting part, what I read about Tata Technologies, is that even the last 3 years, 2-3 years also, they have made significant progress. And the last 9 months, which are very challenging for the IT industry, at that point of time, also their top line, bottom line was quite impressive. I don't remember the numbers exactly. So clearly, it's a class apart. And we always like these software companies which are focused on the automobile sector, like KPIT for one, Tata Elixir. Have both these companies have delivered fabulous returns. And Tata Technologies is one more company which is in the similar vertical. So I'm sure there'll be great appetite and fabulous listing. Maybe you could look at buying the stock 6 to 12 months down the line when the volatility has stabilized and there's a clearer picture about its future prospects.
Dipan, now Tata Group company, automobile, it is a beneficiary of what is happening in the automobile sector and a beneficiary because they will be implementing AI, benefiting from AI rather than getting disrupted from AI. The point is, do you buy it after the listing or do you just wait it out like you said? Because this is going to be one of those gangbuster listings. I mean, we've seen that some good companies, when they've gone public, they never gave you a chance, post-listing, like DMart for that matter.
That's right, Nikunj. From a retail investor's perspective, I think they should try and go for the IPO definitely. And if you get allotment, then it's going to be like a lottery. And thereafter, I think I would say 3 to 6 months after listing, you'll get a chance. Everything doesn't on listing. There's a lot of momentum and there's a lot of fireworks, and stocks valuation generally are elevated. But a few months down the line, 2-3 months down the line, things tend to settle down. Let us see one quarterly result also, how it turns out. And then I think if you buy the company, in my experience, at least there's some margin of safety. Another strategy could be to buy some small quantity on listing and then try and do like an SIP, buy small quantity over the next 3-4 months or so. And that will also, you could have a decent holding with an attractive average purchase price as well.
Every day the headlines with respect to what's going on in the world of tech, be it deep fake, AI, etc. It's just, a lot to actually keep up with, but there are a lot of companies that are managing to adapt to it quite well. How critical do you think it is for some of these large cap, mid cap, traditional IT plays to actually adapt and leverage and capitalize on all of this new technology to stay ahead of the game within the space?
So I think that AI is going to be a great opportunity for the Indian IT industry, whether it is of the scale of Y2K or internet or remote infra management, some of the other tech trends which have really taken the IT industry to new high. That needs to be seen, but certainly it's an opportunity for a lot of IT companies. And with the way the numbers have come from US inflation last night, and the way the Dow has recovered, I'm pretty certain that you may see a good amount of outperformance coming in from the software companies from today itself. I think ADRs of all these software companies were around about 2.5% higher. And if the tech spending starts to recover in US, which it is likely to be so, then these companies certainly will get a lot of traction from investors. There's valuation comfort over there. And once spending picks up, I think a lot of it will be in this AI and new generation technologies. And Indian companies have been fantastic at transforming themselves from one tech wave to another. And certainly they will absorb this new technology pretty well and make new offerings for their customers on this tech platform as well. So very positive on software companies. So far the view had been tepid, but looking at the way US inflation has turned out, I think this could be a turnaround point.
Dipan, the other big trend which is at play is that Look at the comeback in a Vodafone, Suzlon, or for that matter, even we've seen JP Associates. Now we may talk about these are companies which, in a sense, are not the companies which offer a very strong. There's a lot of bitter aftertaste after what happened in the last bull market. But some of the companies are trying to genuinely come back. They're reducing their debt, whether it is Suzlon or JP, even for that matter, Vodafone. How should one look into them now? Because there is a case of debt reduction which is there in some of the big corporates now.
See, I think Suzlon clearly is on a very solid path, and that's a lot to do with the industry that it is operating in as well. Where I think after many disruptions and after many changes in government policies, now we are seeing serious investments taking place. So the likes of Suzlon, Inox Wind, I think the way the order books are bulging, they are in for good times per se. And anyway, the capex cycle also is picking up, so that benefits them. But when it comes to JP Associates and Vodafone, I'd like to be a bit circumspect because the underlying industry in which they're operating in, there are challenges over there, especially telecom. I think in Vodafone, even if it does get the funding, it still has to deal with massive competition from Reliance Jio and from Vodafone and from Bharti Airtel. And they have to make massive investments in 5G, where they are clearly left behind in this particular race. So from that point of view, from a business perspective, although they may get the funding and the debt level may come down, I'm not certain of their profitability prospects going ahead. So that's an avoid for me. Same with JP Associates as well. I've lost touch as to what is still left in JP Associates and what is not left, and what kind of business that actually they are going to try and grow. But my sense is that even if they get the funding, I'm not sure that they'll be able to scale up the business as well as confident as I am about Suzlon, which also has been a classic turnarounds company.
Dipan, do you own it?
Not any of these two companies, but yes, Suzlon, we have some trading positions as a measure of disclosure.
Dipan, what about the entire space when it comes to the likes of QSR? Because we have seen a big kind of drop, at least this year, in terms of the SSSG. They were not strong. The benefit of the raw material prices hasn't come through yet. Would you buy any of the QSR names, whether a Jubilant? Because today BofA also actually came out with a note on Jubilant talking about it positively.
So I think if you have a contrarian streak in your investing strategy, then certainly QSR companies meet that criteria. They're outstanding businesses, great runway for growth, and where we are seeing changing tastes and increased spending on entertainment, and as well as these food delivery aggregators also benefiting sales of these companies. So from a long-term fundamental basis, these companies have got great prospects, but there are transient factors because of which these companies have reported very disappointing numbers for the September quarter. Same sales stores growth rates have certainly stagnated, and some of the companies also have cut their target for setting up new stores as well, or new restaurants. So it's in a bit of a problem situation. And at this point of time, I think if you have a longer term view, 3 to 5 years or so, then these companies certainly can give good returns over a longer period of time. So from that point of view, I'm positive. Having said that, I think from an investment perspective, if you're already holding the stock, then I think these are not the levels to sell because we've seen decent correction also in them. But from a longer term perspective, I'm pretty certain that these companies can deliver exceptional returns going ahead, and you could perhaps buy at every decline rather.
But Dipan, on that note, we'll let you go. Appreciate waiting by and speaking with ET Now today.